Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. I'll start with ice raw sugar in New York. The weekly key reversal down, now 4 weeks ago, was, probably still is, the most significant recent feature here, at least since the double top made over August and September. Yet even this has been subject to the same overhead resistances that we saw back in that double top in August, notably the heavy congestion from January to February 2017 between 210 even and 21 even, and the upper tine, the broken upper tine of the December 2020 to April 2021 shift pitchfork, bullish shift pitchfork, and that's currently at 20.25. Now, of the two resistances, I'd say the former is the stronger. Meanwhile, the support below is the same as it has been in September and October, basically the February 2021 high at 1894, though the recent late September uptrend, currently at 1912, is vying for recognition as a possible new rising wedge type trend line. However, overall, the action between the support and resistances would seem to be stabilizing, yet with a couple of new factors now entering the frame from below. Now these are the April to date uptrend, currently at 1896, and its partner since July, the rising medium moving average, currently 1888. Now those two have partnered intimately since July, and the medium moving average is currently lagging a bit lower compared to the uptrend, so it's best to keep that in mind. The uptrend has crossed up over the 1894 support from below, and it adds to what I've said now for a few weeks, and I quote, "This market has what looks like elements of a market being squeezed, but with still plenty of room to maneuver. Just be careful of the downside for the moment," end of quote. That was then, and this is now, and I'd add this additional comment: the room for maneuver now is getting significantly less than it was then. Ice Europe white sugar. First off, I acknowledge once again that off the top of the daily chart, we still have the whole of the September 2020 to date action as a huge possible bull flag, with a potential topside target X2 in the 560 area. This is originally a very big ask of the market, but then as other targets have been achieved, it seemed appropriate to keep this one in mind, just in case, at least for now. However, I'm increasingly minded to look to retire this target, as I think the market's patterns may have changed enough to no longer make it valid. This is something I will look at again next week. Anyway, the market is still nicely moving up and around the middle tine, currently at 523.90 of the early August to early September bullish shift pitchfork. This middle tine has some form. It's acted as a rolling higher support in September, and last week as a rolling resistance of sorts. Thus, it can be seen as a market attractor for now. There are a couple of other features to note. The congestion in early 2017 in the 518 area has a lingering cap on the market, as we've only once managed 2 consecutive closes over it in October, and it was rejected back lower soon thereafter. The other feature is to look at the rising upper trend line of the connected tops from August to October, currently at 537.10. This intimates that we may have the beginnings of a possible rising wedge pattern, or possibly a bull channel. However, the lower trend line for this is still a bit obscure. The best I can give for this is the previously rising, now flatlining short medium moving average, currently 501.60. But even this one is just a suspicion and not necessarily one that I'll be wedded to. Anyway, the market is generally moving up along this middle tine for the moment, so until it decides it doesn't wish to anymore, that is the thing to watch. So far, it's been a pretty good indicator of the bullish angle of attack of this market. Sugar white premium spread. The key feature here happened last week. Last week we had a weekly key reversal down here, a significant move that saw prices move back down below the flatlining long moving average, currently 77.5, the 50% Fibonacci line for the big old July 2019 to May 2020 move at 80.25, plus the 50% Fibonacci line for the whole of 2021 at 73.75. finally halting at the middle tine, currently 68 3/4 of the broken, big bearish May 2020 to February 2021 shift pitchfork. Last week I was somewhat lacking in confidence about this pattern, and had only really recognised the upper tine, which sits with the May 2020 to date downtrend currently at 97 1/4, and is only a 2-pointer at most. Well, this past week it has strengthened my view of its importance, and I will treat it accordingly going forward. This week prices have seemingly stabilised and based so far at least on that declining middle tine, with the top side being held down by the 2021 50% Fibonacci line, as well as the old neckline from the 2020 head and shoulders top pattern that's currently at 75 1/4. The question here this week is whether this is a pullback ahead of further declines or a pullback that leads to higher prices. The key in deciding this could very well be if prices break and stay up over the long moving average. Personally, I'm not so sure as yet. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.